Thank you for taking the time to listen to this presentation. Strategic Investment Realty is a boutique brokerage that helps Canadians buy investment properties in Canada's leading real estate markets. Today, I'm going to share our journey and explain how we can help you build your perfect real estate portfolio. First, you need to understand the real estate cycle. Market timing is essential to making money in real estate, ensuring that you buy at the right time for the right price in the right market. We connect you to an expert network. We provide the information, the tools, and the opportunities, and we work with many developers so we can bring a wide variety of product types in multiple markets. Every property and area goes through the same system of due diligence, checkpoints, and scrutiny. It is then presented in a complete online package giving you 24/7 access at your convenience. The offer and closing process is simplified regardless of the location of the investment. We then select the best local property management companies to ensure their service meets our standard of client reporting and, more importantly, offers you a hassle-free management option. We stay involved long after the purchase to ensure everything is working well to maximize performance. Our system is turnkey. Our mandate to simplify investing in real estate by leveraging our expertise and providing what is necessary for you to invest with certainty and the knowledge that everything will be looked after. Our quest has been for over the last 20 years. Our research tells us Western Canada offers the best potential today, energy hubs and centers of knowledge. In fact, over the last 20 years, our team has been able to uncover some of the best real estate investments available to Canadians. In order to be successful, we knew we had to think big and follow a systematic approach. This is what took us to Fort McMurray in 1997. With over $200 billion invested, these properties have tripled in value and have provided substantial positive income for our clients. In 2003, we looked to the Lower Mainland with strong population growth and reasonably low values, and purchased a distressed situation in a centralized location, and this has proven very successful for those that invested. Long before Saskatchewan was a have province, our key indicators pointed to the region. So in 2006, we purchased several buildings in Regina, Saskatchewan. The strategic investing system guides us in moving forward and deciding how we and our clients invest. The second is made up of 3 rules we strictly follow to avoid bad investment and maximize our clients' long-term wealth. We've designed a system so that you are clear about your objectives when it comes to real estate investing. That you're not creating another job for yourself. The system is simple for you to employ, and that you're creating wealth, and you will support the lifestyle that you desire. Wealth is measured in time versus being rich, that is measured in dollars. Time is the only commodity we can't replace, and as such, we focus your investments to be working for you, not the other way around. Rule number 1, anticipate. In order to ensure cash flow and continual wealth building, it's important to understand which markets are emerging and why. To do this, you need to do the research, such as tracking jobs, population, and economic growth. As residential is a laggard in the real estate cycle, usually it's followed by industrial activity, which is business investment and land sales. Commercial activity follows, with that being conservative money, pension funds, and life insurance. And last is the residential market, which is the housing and services for the people who come because of the jobs created. We are following the smart money. There are 3 ways to build wealth: monthly cash flow, mortgage paydown, and property appreciation. Most people focus on cash flow. Yes, cash flow is important. It means you can own the property without having to spend money each month. But if you look at the difference between positive cash flow of, say, $50, $100, $150, or $200 per month, each $50 only represents about 1% per year in return. In today's market, we're finding the newest way to increase the return is with mortgage paydown. With these very low interest rates, you can see the impact. But we all know that the largest return is made on the appreciation. This is has the single largest impact on your overall return because of the leverage. Every 1% appreciation is really 4% return. if you mortgage finance. But for us, you gotta have both. When you have cash flow and equity growth, you have the power. Based on the research we have, we favor real estate markets in Western Canada for both cash flow and equity growth. As you can see, a relatively neutral cash flow property on a reasonable 3% growth can provide you a 20% return on your invested equity. But really, it's all about a balanced approach. The old adage, don't put all your eggs in one basket, rings true in all investments. A balanced portfolio of real estate assets means you are not overexposed to any one market. It can be customized to suit your age, your objectives, and your risk tolerance. Our philosophy is peace of mind and capital preservation. If you decide to buy real estate, you need a team in the market you've chosen to have enough knowledge to buy right. With us, you can leverage our team and expertise to do that for you, allowing you to diversify. Our team is ready to handle every aspect of your purchase and ownership. Since it's all managed, there's less need to focus on one neighborhood. Get a team, find property management. Our system allows you to purchase well-selected real estate in high-growth markets at the right time for the right price. You can do this one property at a time or several all at once. It's one-stop shopping for the busy investor. Diversification is key. Diversification means that you will be able to weather the tough times. It protects you from the down markets, the vacancies, the interest rate fluctuations. Remember before we said anticipate. Our recommendation is that you buy properties in high growth, some stable markets, and some large urban centers. As your portfolio matures, the cost of newer properties will be offset by the more mature properties. The key is surplus cash flow and reserve from other properties to cover the losses and keep you cash flow positive when markets shift. Here's 5 properties we've identified as good investments. The assumptions are average interest rate of 3.25%, 75% loan to value, 3% vacancy allowance, 3% capital appreciation and revenue growth, with expenses pacing inflation, expenses representing about 35% of the gross revenue. The numbers look like this. In today's market, you can buy brand new upper end rental for $200,000, which is a down payment of about $46,000, and in year 1 you'll have positive cash flow of about $1,000 a month, and growing that to about $7,000 in year 25. In Estevan, which is southeast Saskatchewan, in the Energy Hub, you can buy a property for $262,000, representing down payment about $71,000, and generate strong positive income of about $4,800 in year 1, growing it to over $22,000 in year 25. Red Deer, Alberta's transportation corridor, $152,000 will buy you about $1,300 a month in net income, growing to about $9,000 in year 25. Alberta, Cold Lake is feeling the Fort McMurray effect. It is the oil sands processing center. So $176,000 is about a net income of $3,500, growing to $18,000 in year 25. And lastly, one of our key areas in today's market is Fort St. John, British Columbia. We're buying larger properties, $439,000, so you need a larger down payment, but the income is significant and strong and anticipated to grow much like Fort McMurray did 20 years ago. Here's a summary. You can accumulate all the properties at once, or you can do it one at a time every 2 years, whatever your budget and whatever your objective. For this example, we assume all properties are purchased at the same time. The portfolio is over $1.2 million, the equity around $300,000. In year 1, your net annual income after all expenses, mortgage, and property management, you're receiving about $15,000 positive income, and your tenants will pay off about $25,000 in mortgage. To summarize that, over the next 25 years, you can see the income is growing incrementally. In about year 16, you're looking at about $50,000 a year in annual income, net annual income, growing to about $136,000 as your debt will have all been retired. So finally, that perfect portfolio. Lots of income, lots of net worth, and lots of peace of mind. Our portfolios are customized to suit your age, to suit your objective, and we are able to run any type of numbers for the number of years before you retire. So if you want to learn more, or you can register online for an event, or you can reach out to me and call me at 604-764-5647 or Cynthia at asin.ca. Thanks for taking the time today, and happy investing.